Virtual trading floor is on. Good afternoon, everybody. We made it through Monday unscathed. We made it through the weekend. No one woke up to any crashes. It's a good thing. All right, let's do this disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I didn't add on any more new short puts for this week just because of the macro uncertainty, and I've been doing that stuff a little bit more on my kind of macro thesis thought process. So position disclosure looks light, but I still have 24 positions on, I think is what the number is. But there we go. All right, popping over to the market. Just give me one quick second here. Filling on a couple of positions while I was doing the disclosure.
What do I do? Do I click on the top one?
All right. All right, so we finished very flat. The S&P here is like exactly flat. Exactly flat on the S&P, up small on the Qs, and down a bit in the IWM. A little bit more than I would like to see at this point.
And then what?
So overall, the S&P didn't do anything, and that's a good thing. Unchanged is actually bullish right now, because time, I think, is bullish. We're working through a healing process after the VIX, after all the increase in volatility, and if you can get an unchanged close, you know, the way that a lot of those vol control systematic funds work is based on what the average realized volume is over a period of time, what the VIX looks like over a period of time. So the models that we were looking at last week showed that, you know, if you can get like an average move over the course of the next week or 2 weeks or whatever that is, you know, 0.5% or less, that at a certain point you'll start to get those that cohort of the systematic funds to be buyers again. So it's just one day. We don't want to get too excited, but one day here of an unchanged close is actually, I think, a good thing for markets. It's a good thing generally. It's going to be bullish generally, but it is only one day, and we've got a lot going on this week. We've got PPI tomorrow. We've got CPI. That's going to be the really big one on Wednesday. I think we've got retail sales on Thursday. So there are a lot of potential market catalysts out there that can increase the movements again and get us going. And I still feel like, even though we got the flat close today and it was kind of a quiet day overall, I still feel like this market's on edge. And I go back to that Thursday unemployment number when it hit, the claims number, which, again, I still view as, I'm not going to say it's inconsequential, but I view it as not, you know, the most important number, and it wasn't like it was a massive difference compared to expectations, but yet we were able to get a really big move off of it. So we are still in an environment right now where you can get very big market moves, especially when a catalyst hits. So I think that the market's on edge a little bit still now for these catalysts that we have this week, even if today was a little bit quieter. So again, tomorrow we've got PPI. PPI is important, and it will move the market, especially because it's one of those weird calendars where the PPI is ahead of the CPI. Usually it's the opposite. Usually CPI is Wednesday, PPI is Thursday. This week, for whatever reason, PPI is Tuesday, CPI is Wednesday. So maybe the PPI actually gives a little bit bigger movement than it would normally, just because it's coming ahead of the CPI and everyone's going to be trying to read it and overread it. But the CPI is going to be the one that gives us the big move. I saw at one point today that the market's pricing in an implied move of the CPI of 1.25%. I actually would expect it to be more than that, but we can reassess that, you know, tomorrow into the close and kind of see what the market's doing after we get through the event tomorrow morning. But yeah, overall, we had a really quiet day, as was our expectation. We came into today with a game plan from an index perspective of, hey, let's have a less is more approach. It was a big, crazy, hectic week last week. I was actually really happy to be able to catch up on some sleep this weekend because, man, it was so hectic last week. I was waking up like really early every day. I was trading by 5 a.m. Eastern every day, and it was good just to catch up on some sleep and have a quieter day. But it was a really, really big move last week, starting with this incredible buying opportunity, buying the panic, buying the extreme extension to the downside on Monday morning. Lots of intraday volatility, even close to close volatility. That Wednesday move, close on lows, a little bit scary. Thursday, I just referenced, is when we had that claims number hit that was an improvement compared to expectations, and we got a big boost that almost fully negated Wednesday. Friday we got a little bit of follow through, though Friday was also a little bit quieter, and then today was the quietest day that we've seen thus far. So market is now fully corrected the downside extension. It's sitting in this equilibrium zone. It's sitting in the space between the 8 and 21 EMA. I've posited at the end of last week that maybe we get a little bit more upside follow through than the market would initially expect here, or that anybody who's bearish would want to see. So you begin to really push out the bears a little bit more, maybe get some long chasers in who missed that initial dip buy, and then maybe we see a rug pull. But at this point, I think it's just a matter of what happens over the course of the next couple of days with these economic numbers, particularly with the CPI. That's going to dictate the action. And I do kind of think that the risk is a little bit to the downside on these numbers. I'm sure if you get a really light CPI compared to expectations that we will rip higher. But I think that there's a big danger if we get a hot CPI, then all of a sudden the market's going to be talking about stagflation again because CPI comes a little bit hot as we're seeing that economic picture deteriorate. So I do think that this is a really important CPI on Wednesday. We can talk about it tomorrow, but I'm talking about it a little bit now because we also have PPI tomorrow. I do think this is a really important CPI on Wednesday to not come in hot, because if you come in hot, I think that we'll be down a lot more than we'll actually be up on a light number. That's just my kind of general thought process and thesis coming into these numbers over the course of the next couple of days. But obviously we have to be in a little bit of wait and see mode. Tactically, as we get into this equilibrium area, it makes a lot more sense to be neutral. We looked at some data again this morning that confirmed what we were talking about yesterday, which is that positioning is neutral. It's not like, and again, in the VTF, I posted some charts really early. I wish they were actually in Pat's note also, so that we could just look at it on my screen share. There was some stuff in Pat's note. This liquidity one is important. We've talked about this a lot. So liquidity is still really low right now. This positioning indicator from Goldman is not negative. Here's just another example. There's lots of different data points out there that show that the market positioning has gotten a little bit more neutral compared to where it was, but it's not like where it was in October of last year, which really set up just this incredible buying opportunity. There was one other chart in here that I thought was interesting. This is actually a notable chart also, even though this is off topic from what I'm talking about, because we've spent time talking about this over the years as well here in the team, that the correlation of bonds and stocks is something that actually flips over time depending on the market environment. And now we're seeing that bonds are negatively correlated with stocks again. So that's a new development that we want to continue to monitor. Most of the time here, as you can see based on this chart over the course of the last year plus, they've been positively correlated. But I would say that probably for most of my career, they've been negatively correlated. But that's one of those things that flips back and forth just based on the kind of the macro story of the moment. So that was an important one. But really what I'm looking for here is more of on the positioning side. And the positioning data, some of the charts that I was posting in the VTF really early this morning, just confirmed what we kind of already knew last week, which is we're at a spot here where positioning is neutral. It's not washed out. Neutral means either way. There is room here over time for the CTAs and for the volatility funds to re-lever up to add exposure, but there is also room for them to sell further. And a lot of that's just going to depend on if this market can work through a healing period over the course of the next few weeks without any major blow-ups occurring that get the VIX moving higher again. So we got to get through CPI this week. We got to get through Jackson Hole, which I think is like August 23rd-ish. We got to get through eventually the NVIDIA report. NVIDIA is always like outside of earnings season. Basically, everybody else has already reported. Earnings season starting to slow down. I think we got NVIDIA still in late August, like August 28th or something like that. So if we can get through these events here, these next few weeks, without any major blow-ups that wreck the market down really fast in a short period of time and accelerate the VIX, then this market can go through this healing process where slowly that gamma will become more and more positive again. Our intraday ranges will tighten up again, and the underlying bid can come back into the market, which can, like I said, positioning is neutral, so that positioning can become increased if and when it becomes increased. That can create like an underlying bid in the market, similar to what we've seen through most of this year when we were in this consistent kind of grindy uptrend for the most part. But at the same time, if you get a reacceleration of the VIX because of an event, there are still a lot of triggers that are lower. I remember last week we kept looking at, I think it was 52.55 in the SPX as a key trigger spot, where above 52.55 on a closing basis, we still have forced selling coming in from CTAs and a lot of systematic funds, but the number's much less above 52.55. I think we saw one statistic that said it dropped by 50%, but that's an example of a trigger where if you get back below that, then all of a sudden, markets work in feedback cycles, selling leads to more selling. So the positioning right now is neutral. The technicals are also neutral. We're sitting here between the 8 and 21 EMA. There's no longer any extension at all. After last Monday, the market was one of the most downside extended I've ever seen it in my career, outside of probably COVID. There is now no extension at all. Positioning is neutral. We're between the 8 and 21 EMA. We've got CPI on Wednesday. This is just an environment right now to be sitting on your hands a little bit more, not putting big risks on, not putting on a lot of new swing positions. It's an opportunity for, if you got really good longs last week, to book profit on those longs and or to start putting some shorts on to hedge yourself out a little bit more. And I think that's a good move even if we work our way up to $540 in the SPYs. Which again, my initial thought process, the CPI can change this very quickly, my initial thought process again was that we would overshoot to the upside. So, but even if we work our way up to 540, I still think it's very prudent here after this $23 bounce in the SPY to be taking long risk off the table, and potentially, if you are keeping some long risk on like I am, building into some of those ETF shorts like we've discussed that you can do strategically in the past. So that's where it's at. That's what I'm doing. I initiated an IWM short today. I was more aggressive on my QQQ short. At the same time, did my best while following my game plans to unload a little bit of the long exposure that I still have. So that's pretty much all I got. Again, intraday today was I don't want to call it boring, because we did have a couple really fast collapses, like this one here at 11:20. So I was doing some day trading. I was shorting NVIDIA at a certain point. I shorted some SMCI at a certain point. Took some add-ons in those Qs on the short side for shorter, tighter trades. Also traded a couple of the crazy names. I made a couple dollars in PSIG. I lost a couple dollars in GNLN. Luckily, I made more in PSIG than I lost in GNLN. But taking some day trades that are out there. This short we saw come in very quick. I'm like trigger happy right now on these big sells, or if I see anything that's looking like a downtrend, to just hit the bid and hedge out some of my exposure a little bit, because I am still nervous. I think maybe the market's on edge, maybe I'm still on edge a little bit also, I'm still nervous that at a certain point we could sell below some of those trigger points, and I don't want to be caught, whatever that term is, naked when the tide goes out, somewhat similar to how I was a little bit on Monday of last week, where I opened up down a massive amount of P&L and, luckily was able to do the right things to make it so that I still had a positive week last week. So it's pretty much all that I've got. Not too much to talk about on what was a quiet day that met our expectations. But like always, I am more than happy to answer any questions that anybody anywhere may have. So we got plenty of time. I am going to a concert tonight, but I've got hours before that. So any questions that anybody has about anything from the simple to the complex, individual stocks, the market, whatever it is, I'm happy to answer them. Or if no one has anything because it was a quiet day, we can wrap things up. I'm seeing Slipknot at Madison Square Garden tonight. Yeah, should be fun. Should be a good time. Answer Dave then Robert's question at the same time. Blink 182. I like the drummer. I struggled with the singer back in the day, but it's interesting to see that they're even touring. It's kind of cool. Should be a good time. Who's opening for them? Out of curiosity. I'm seeing man, I can't remember the name of the band. In like October, I think. But it was one of those similar Blink 182-ish bands from back in the day. I'm actually going to see the opening act. That's why I can't remember the name of the actual band. I think it started with an A. Oh, Alkaline Trio. I'm not going to see them, but I'll probably stick around and watch it. I'm really going to see the opening act. Cyril in YouTube says he has a question about execution. All right, feel free to take your time and type it in. I don't got anywhere to be. Yeah, blast from the past for sure. First from Michael in the VTF. First time back in the VTF in a couple years. I am curious on your thoughts on Intel lately. Is it a once in a lifetime price? I don't know. It depends on if the company can restructure properly. So Tate here is pretty knowledgeable, I think, on the space compared to me. I don't really have any technical expertise as far as chips and I don't know, anything tech related and computer related. I can't tell you much about. It's just not something I have a knowledge set on. I can tell you about chart technicals. The chart technicals in Intel look terrible, but on the other hand, maybe that means it's a value opportunity to be able to buy stock. I think that's the gist of your question. But the things that Tate here has been telling me, who I consider him to be a lot more knowledgeable about me in the space, is that Intel's in trouble. They're just not making a good product. So the thing about value is that sometimes value is a value trap. Because I've been hearing people tell me that Intel is a value buy for a few years now. And yet here we are at new lows. I mean, these are lows going back to 2013, 2012, basically. So this is not one that I'm willing to die on. One, because I just don't know the company in this space well enough. But the people that I trust, who I feel know more than me, are telling me that this company is going through some big problems. I wouldn't even buy their products now, let alone their stock, is what Tate says. And you had given us a article last week about how they're not servicing their most expensive product that they sell has all types of problems with it, and it sounds like that from a customer experience perspective, they're basically just telling people too bad, deal with it, which means that no one's gonna rebuy those products going forward. So it's not something I'm touching. From Keen, what probability would you give the SPY breaking last Monday's low without the VIX breaking the 65? I think it was 65 Monday high. That's a great question. That's a great question. Because the thing about this move on Monday was it seemed like, and this is more related to positioning than anything else, as we understand positioning has become just a huge part about how the market works. It seems to me like the VIX was up more than the S&P was on the downside. Like in a vacuum, if you saw the VIX at that price, that you actually would have expected the S&P to be down much more than it was on Monday. And again, that was probably more positioning related than anything else. So based on that, I think if we were to break Monday's low, it depends a little bit on how it happens, obviously. If we just get a disaster CPI on Wednesday, and by the end of the day, Wednesday, then you're breaking 510 in the SPY, that'll be an event that probably has a really big impact on the VIX. It's not what I foresee happening. I foresee that. So first of all, I'm not necessarily in a camp that we are ever going to break this SPY 510. I'm kind of, if you ask me right now where we are today, and this will obviously be evolving as time goes on, time, as far as I'm concerned, is bullish. The more time that we can have go by right now without a blow up is bullish. But where we are right now with all the events that are in front of us, if you ask me right now what's a higher probability, the market getting above this 555 high, or making an all-time high, so like something on the upside, versus the market breaking Monday's low, if I have to pick one or the other, I would probably tell you it's literally a coin toss, 50-50 from here. And again, the more time that goes by without us really breaking back down, the more I'll think it's a higher probability that we can actually work our way up further. But right now I feel like it's a coin toss. In the event that we were to get below SPY 510, it obviously depends on how we get there. But broadly, I would say that the VIX isn't making a new high as the SPY is breaking 510. I don't think so. But again, it depends on what the catalyst is that breaks us down there and how fast the move actually is. So it's a good question, Keen. Appreciate it. Piercing the veil. I've heard pierce the veil. I've heard of them, but I don't know anything about them. And hot milk, I've definitely never heard of. It's a funny name. Over into the YouTube, from Cyril, a question on execution. Do you type stop and break even orders separately or hotkey? So the question is, I guess, basically, and this probably goes back a little bit to the strategy that we talk a lot about doing one-to-one kicks. You're getting your risk covered on the one-to-one kick to get your first offer out. Let's say it's a long, to get your first offer out and have your stop. I do them separately. I don't have any hotkeys that are there's a term for it, and the term's escaping me. I don't have any hotkeys for any of my trading that are like multi-order hotkeys. So everything I do is, if I bought that breakout, first thing I'm doing is I'm immediately getting my sell stop in. Second thing I'm doing is getting my first offer out. So thank you, Cyril. From Apex Joy in the YouTube, do you think the next bounce will be led by large cap growth instead of the broader market, like the RSP or the IWM? Does NVIDIA look bullish on the daily chart? So two-part questions. Someone else asked me this question earlier today on leadership in the market, basically. So if we were to have a bounce here, do we think it's going to be led by what part of the market? Is it going to be led by the IWM, or is it going to be led by Mag 7? And I genuinely don't know. I genuinely don't have a good answer for that yet. We're not, and also we're not there yet. I know that today and a little bit at the end of last week, the Q showed relative strength to the IWM, but broadly, because of what the VIX has done, correlations have dramatically increased from where they were in June or the beginning of July, as an example. So right now, while these correlations are so high, everything is more or less trading together. The IWM and NVIDIA are more or less trading together. Very, very different than where we were, just a couple months ago when the IWM and the Qs were literally trading inversely to each other on a 5-minute chart. And then we had the CPI, the June CPI in July that ripped the IWM all the way up as the Qs actually sold down a little bit. So the direct answer to your question is who leads a bounce? I don't know. I need to first see these correlations become unpinned again. We don't have the dispersion trade on in the same way. So right now, I think it's more about just getting the direction right on the broader market. And then as time goes by, is why I keep saying, like, time is bullish. Like, we're really in a healing process for the market. We need to make it through the next couple weeks without a big blow up. If that happens, the VIX will continue to come down, gamma will increase again, and then all of a sudden we could become in a market again of dispersion and winners and losers. And then at that point, we can assess where the leaders are. Is it the IWM because we're finally getting interest rate cuts by that point? Because it's September by that point? Or is it Mag 7 again just because, the $110 billion buyback in Apple is unbeatable? I don't know the answer to that yet. We're definitely wait and see. And the second part of your question was you're asking me, does NVIDIA look bullish on a daily chart? It doesn't look bad. It looks more bullish than the Qs do. And they negated that negative news that came out really well because that was part of the sell-off on Monday last week. If you remember, it wasn't just the yen carry trade that started to trigger things. It was also Warren Buffett selling Apple. It was also that there was negative news out on NVIDIA that morning. And NVIDIA touched the 21 EMA today. That's a better bounce back than the Qs themselves have. So yeah, I think that NVIDIA itself looks bullish, but I also would just repeat what I keep saying, which is that correlations are very high right now. So you're not going to get continuation to the upside on NVIDIA if you don't get continuation to the upside on the S&P and the NASDAQ. So we got to nail the direction of the market right now. It's the most important thing, and so much of that just hinges on what happens on Wednesday with the CPI. From Robert in YouTube, I feel like Intel these days is like Nokia back in the day when the entire world was transitioning into smartphones, and they're totally behind in all of this semiconductor game. Kind of agree with the thought process there, Robert. It just seems like they're behind on the tech front compared to what NVIDIA is doing and to some degree what AMD is doing. But again, not my area of expertise by any means. I just listen to what the smart people tell me. Welcome back, Michael. It's good to have you. Good to have you. Anybody else have anything? All right. Shorter afternoon meeting today, but there wasn't much that happened, so it makes sense. I think we're all just in wait and see mode. So we'll see how we gap tomorrow. We'll see what happens with the PPI. That'll be our warm-up for the CPI. And that's it. Have a great night, everybody. See you then.